We had a very good turnaround in markets. We started with some apprehension and with a volatility spike, and that quickly evaporated and turned into optimism. We wrote a note this morning, kind of talking about how the fog of the present always complicates the investing process. There's just simply no way to get around it. We can never predict the future, and we can only basically use historical data and instinct to try and come up with the best possible solution to what to invest in. One of the things we wanted to point out, the volatility last week scares a lot of people. It's, very disconcerting, and it was the second biggest VIX spike in history. But when the VIX spikes like that, it is almost always an opportunity to buy. The exception would be with something like COVID, where the source of uncertainty is not removed but remains persistent. Um, but what happened on Wednesday is the VIX rapidly inverted, and then the next day it disinverted. That's usually a cue to buy. Um, I have a theory for why the VIX is relatively suppressed this cycle compared to previous cycles. Part of it has to do with regulatory structure and market circuit breakers that were successfully implemented during COVID. We'll talk about that later, but so far our VIX short trades are doing very well on this turnaround today, and I'm very happy to see that. Um, Volatility tends to be heightened during a challenger term, which we are entering in January. So that's something to keep in mind, particularly with all the tariffs. That is one of the main risks we're watching, and we'll keep you apprised of that. This just shows how rapidly the VIX curve normalized in shape. You can see on December 19th it was inverted, meaning that there's more uncertainty over the short term than over the medium term. That doesn't really make sense because more can go wrong the more time there is. So we expect the curve to reflect uh, that natural tendency, and if it doesn't, it's usually an opportunity to buy. And this case, the VIX was at 25 a few days ago, and now it's in the 17 handle. So this again was an opportunity to buy. Uh, Remember that Santa comes later in December. So the Santa Claus rally hasn't even started yet. It starts after Christmas and it goes into the beginning of January. And we think that even though we've had some down action in December and it's been a lackluster month in some respects, at the end of the month and the beginning of January will follow the Santa Claus rally path, and we will get some gains from here on in. The consumer sentiment number this morning initially caused a sell-off. It should be watched but not feared. The consumer is still strong going into Christmas. The U.S. economy is likely humming above 3% growth. That is gargantuan for an economy our size. And then here's a very interesting graph. Despite all of the pissing and moaning about inflation, for the entire post-COVID period, disposable personal income and employee compensation have both significantly outpaced inflation. And I think that this is sort of one of the keys behind us having probably the strongest economy of the 21st century so far. While sentiment has been negative throughout this expansion, like the consumer sentiment numbers this morning, the data has screamed soft landing. So we're not going to let more negative consumer sentiment data derail us from the hard data on the economy, which is very positive. One thing that you have to remember is that we are taking risk here, right? The more chastised you are for the risk you're taking, the more premium there probably is in it. Let's consider Bitcoin, for instance. When people were highly skeptical of Bitcoin in the early 2010s, the returns were much higher. Now that it's gotten a wider societal buy-in, the returns have diminished. And that's because when you're taking a risk, you're also, you're standing up to skepticism. Without that skepticism, you don't have the ability to get the type of returns we're getting. I don't know if you saw, but last week, the Wall Street Journal compared options contracts to crack cocaine. That type of skepticism, while it may be disconcerting, is actually a good thing. That wards people off, and it means that less people are using these instruments, which means there's more alpha for the people who are willing to take the risk. You can't get scared by pullbacks during a bull market. Pullbacks are part of a bull market. They're a feature, not a bug. The more doubt there is, the bigger the sting you have when you buy something, the more upside it likely has. That's part of what you're doing, right? You're getting compensated for taking that risk. You're getting compensated for that uneasy feeling. That's our presentation for today. We hope you all are having a very Merry Christmas. And we can't thank our subscribers enough for putting faith in us. We know that Nike trade was rough, but hopefully Broadcom was strong enough to get you through. So thank you so much, and we'll talk to you tomorrow.